Hey there, curious mind. Ready for a quick, impactful deep dive?
Let's do it.
Today, we're cutting through the noise on NetApp's Q1 FY26 earnings. We've got solid results, a beat on estimates, and some really interesting moves in AI and cloud to explore.
Absolutely. Lots to unpack there.
Our mission: unpack these numbers, figure out what drove them, and see what their guidance tells us about their future, especially in tech right now. Let's get to it.
Right. And we're looking at their earnings reports, their prepared remarks, analyst takes, really trying to give you the full picture,
Okay.
going beyond just the raw figures. What does it mean strategically, especially with AI and cloud accelerating like they are?
Perfect. So let's set the scene. NetApp just dropped their Q1 fiscal 26 results, and the immediate takeaway seems to be, look, they had a strong quarter, a solid start to their year.
Yeah, I'd agree. A solid start is a good way to put it.
So what were those headline numbers? What really jumped out?
Well, diving into those headlines, they definitely beat expectations. Total revenue landed at $1.56 billion.
Okay, 1.56 billion.
Yeah. And what's key there is it was above the midpoint of their own guidance range.
Right.
And it also topped the analyst consensus. That was sitting around $1.54 billion.
Got it. So a beat on both fronts.
Exactly. It works out to a 1% year-over-year increase, which, in this climate is steady growth.
Okay. And earnings per share?
EPS, diluted EPS was $1.55. That was just a slight beat over the $1.54 analysts expected.
So top and bottom line beats.
Correct. It
Yeah.
really does frame up as a solid kind of confidence-building start to their fiscal year. Not just meeting expectations, but, edging them out.
Okay, that's a great start. But numbers alone, they don't tell the whole story, do they?
Never.
What were the big drivers behind hitting these figures? Any specific areas or segments that really fueled this performance?
Yeah, if you look closer, there's some interesting dynamics. Regionally, the America's enterprise market was particularly strong.
Oh, okay.
And that strength actually helped offset some declines they saw in the U.S. public sector and over in EMA. But the real engine, I think, was the strong demand in specific growth areas. We're talking continued pickup in their all-flash storage.
Always a big one for them.
Definitely. And also a noticeable uptick in their cloud storage services, both the first-party and marketplace ones. And increasingly, you're seeing their focus on AI solutions start to pay off. Those three are really working together.
Okay, let's stick with All Flash for a second. That's been so core to their business. How did that specific segment do, and what does it say about their market position?
It was a huge contributor, really a standout, actually. All-flash array revenue, it grew 6% year over year,
6%, okay.
reaching $893 million.
Yeah.
Now, that puts them on an annualized run rate of about $3.6 billion. Impressive.
Wow, yeah.
And maybe even more telling, NetApp actually grabbed the #1 spot in the all-flash array market for the calendar first quarter of 2025. That's according to IDC.
Number one. That's significant.
It really is. It's not just market share, right? It shows their enterprise relationships are strong, their core storage is sticky, and it provides that kind of cash engine to fuel the moves into AI and cloud, which can be more competitive. Shows they can still execute really well in what some might see as a mature market.
That number one spot's definitely a strong signal.
Mm-hmm.
Okay, turning to public cloud services then, how did that segment look, especially with the strategic changes they've made, like the Spot divestiture?
Right. The Spot divestiture is key context there. So public cloud services revenue was up 1% year over year, hitting $161 million.
Okay, 1% sounds honest.
At first glance, yeah. But here's the important part. You have to exclude that divested Spot business. Spot generated about $23 million back in Q1 of 25. If you pull that out,
So what does the growth look like?
then the underlying growth jumps to an impressive 18% year over year.
Ah, okay. That's a very different picture, 18%.
Exactly. It really shows the strength in their core cloud offerings, their first-party and marketplace services, the stuff that's truly their cloud tech. That grew 33% compared to last year, once you adjust for Spot.
Got it. So the underlying cloud strategy is showing strong, healthy growth once you sort of normalize for the portfolio changes.
Precisely. Healthy, accelerating growth in those strategic areas.
Okay, so zooming out again, hybrid cloud revenue overall. That's like their whole identity almost. How did that whole segment perform?
Hybrid cloud revenue, yeah, it was solid at $1.4 billion. That's up 1% year over year as well.
And what drove that 1%?
Mostly two things. Strong support revenue that was up 3% to $647 million. Shows customers still value that ongoing support.
Makes sense.
And a really impressive jump in professional services revenue. That was up 18%, hitting $97 million.
18% in services. What's behind that?
A big driver there was Keystone, That's their storage as a service offering.
Ah, Keystone. Right.
Keystone grew approximately 80% year over year. 80.
Wow, 80%.
Yeah. It's really changing how customers consume storage, isn't it? Moving from big upfront CapEx to more of a flexible pay-as-you-go model, like a utility.
That flexibility must be huge, especially for AI and cloud workloads that can fluctuate.
Exactly. That seems to be driving that incredible growth rate. It's a clear sign the market's shifting towards these more agile, OpEx-friendly solutions.
Okay, so beyond the top line revenue, what about profitability, financial health overall? Those are obviously critical. Anything stand out there?
Yeah, connecting this to the bigger financial picture, there are some really strong points. Consolidated gross margin improved sequentially to 71.1%.
Good margin.
Very good. And the public cloud gross margin specifically, that hit 80.1%.
80%. Wow.
Yeah, that's up a full 9 percentage points year over year.
Yeah.
And because of that performance, NetApp is actually increasing its long-term gross margin target for that business. They're now aiming for 80–85%.
That's a huge vote of confidence in their cloud operations, isn't it? Shows efficiency and scalability.
Absolutely. It signals confidence not just in the tech, but how well they're running that side of the house.
And what about operating profit? Cash flow?
Operating profit was solid, $401 million. That gives an operating margin of 25.7%. Shows good cost management. But maybe the most notable thing, they hit Q1 records for both cash flow from operations $673 million and free cash flow $620 million.
Record cash flow in Q1. What drove that?
A lot of it was driven by working capital improvements, basically getting better at managing their short-term assets and liabilities to generate cash internally.
Smart. And the balance sheet.
Very strong. Ended the quarter with $3.3 billion in cash in short-term investments. They have about $2.5 billion in total debt. So that leaves them with a net cash position of roughly $840 million. Healthy.
That gives them a lot of flexibility.
Exactly. For investments, innovation, maybe acquisitions down the road. And they didn't forget shareholders either. Returned $404 million in Q1.
How is that split?
About $300 million in share buybacks and $104 million in dividends. Shows that commitment to returning value.
Okay, these financials definitely paint a positive picture. So let's connect the dots. What does this all mean for their strategy? It sounds like it's not just about looking back, but really about where they're heading, right? What trends are they capitalizing on?
This is where it gets really interesting, I think. The financials directly tie into their strategic place, especially around, the huge shifts with AI and cloud. This whole enterprise AI market that's emerging, it's creating real urgency for customers. They need to modernize their data infrastructure. They need to push their cloud plans forward. And critically, they need better cyber resiliency.
Because AI needs tons of data, and that data needs to be secure and accessible.
Precisely. And NetApp's whole pitch is their unified data architecture. It's designed specifically for these complex, demanding, often distributed data needs of AI apps. Legacy systems just can't keep up. They become bottlenecks.
Makes total sense. Can you give us some concrete examples and any AI wins that show how they're enabling this?
Absolutely. Yeah. And the traction is noticeable. In Q1 alone, they secured around 125 deals specifically for AI infrastructure and data lake modernization.
125 deals just in Q1. Okay.
Yeah. So, for example, there was a major global bank. They chose NetApp for a big centralized hybrid cloud data lake. And this wasn't just storage. It's the foundation for their AI plans. And the bank had super strict requirements around cyber resiliency and data protection. NetApp clearly met those complex needs.
Right. Finance is always going to have high bars there.
Definitely. Another big one, a leading automaker. They picked NetApp to manage the massive data volumes they need for training advanced AI models for their autonomous driving software stacks. And this was specifically for an NVIDIA SuperPod deployment.
SuperPod. Okay, that's serious computing power.
Exactly. It's like a supercomputer cluster for the heaviest AI training. Shows NetApp can handle that extreme scale, that throughput, the low latency required.
Any others?
Yeah. Also a large sovereign cloud provider. They chose NetApp for their AI as a service platform. And they specifically called out NetApp's NVIDIA Cloud Partner certification and their secure multi-tenancy features as being key. Shows expertise in secure shared environments too.
So they're winning these big, demanding AI deals. How are they expanding the ecosystem around AI? Is it just for the giants, or are they making it more accessible?
They're definitely working on broader accessibility. In Q1, they rolled out the AI Pod Mini, working with Intel on that.
AI Pod Mini?
Yeah, the idea is to make departmental AI deployments easier and more cost-effective. Let smaller teams or specific projects get into AI without needing, a massive overhaul.
Democratizing AI infrastructure a bit.
Kind of.
Yeah.
And they also finalized the NetApp reference architecture for NVIDIA cloud partners. That essentially provides a blueprint for partners to deliver ultra-high performance using NetApp's data management within those advanced AI setups. Ensures things work optimally together.
So providing the underlying plumbing to make AI easier to deploy across the board.
That's a good way to put it. Not just for the hyperscalers.
Okay, so AI is clearly a huge focus. You also mentioned cloud transformation earlier. Are the Q1 numbers reflecting strength there too? Any customer stories that stand out?
Yes, absolutely. Cloud transformation is still a core success story for them, and it feeds right into that hybrid cloud strategy. Take, for instance, a first-time NetApp customer, a big energy company.
Okay, new customer win.
Right, they were migrating away from traditional VMware, moving to VMware Cloud on AWS,
Okay.
and they chose FSx for NetApp ONTAP.
Ah, FSXN. So NetApp's OS running natively in AWS.
Exactly. Fully managed service, but with all the familiar enterprise features of ONTAP. This energy company, once they saw how well it integrated and the features it had, they quickly expanded. Started using it for AI and other critical stuff too.
So the native cloud integration was the hook.
Seems like it. Another example, a global tech provider. They moved their core database environment to NetApp block storage in the cloud. And the reason they chose NetApp, they highlighted the seamless multi-cloud data movement and the strong data protection.
That multi-cloud piece is interesting.
It really speaks to their unique spot, right?
Yeah.
Being the only enterprise storage service natively embedded in all the major clouds. That gives customers huge flexibility and portability.
Yeah, that is a differentiator. Okay, one more piece here. Cyber resiliency. In today's world, you can't ignore it. How's NetApp tackling that, especially with AI maybe making threats worse?
Cyber resiliency is absolutely fundamental to their whole intelligent data infrastructure message. It weaves through everything AI, cloud. They've been making significant upgrades to security right at the storage layer, trying to get ahead of those sophisticated, maybe AI-driven attacks, and even thinking about future quantum risks.
So building security in at the foundation.
Exactly. And it's not just talk. Their NetApp ONTAP RPI, that's their AI-powered ransomware protection.
Okay.
It actually won a 2025 SE Labs Award for Enterprise Data Protection. Got a 99% detection rate with 0 false positives.
99% detection, 0 false positives. That's impressive validation.
It really is. It underscores that commitment to securing data right where it lives, giving customers some peace of mind in what feels like an increasingly dangerous digital world.
Okay, that's a really fantastic overview of Q1, the drivers, the strategy. Now, let's pivot. Look ahead.
Sure.
What is NetApp telling us about the next quarter and the full fiscal year? What's the guidance, and what does it signal about their confidence level?
They gave clear guidance for both Q2 and the full year FY26. And yet, guidance always says a lot about internal confidence. So for Q2, the upcoming quarter, they're expecting revenue between $1.615 billion and $1.765 billion.
Okay, what does that midpoint imply?
The midpoint implies about 2% year-over-year growth. Or, again, if you exclude Spot, it's closer to 3% growth. That range pretty much lines up with what analysts were expecting.
Okay, so Q2 revenue guidance is in line. What about earnings?
Diluted EPS for Q2, they're projecting $1.84 to $1.94. The midpoint there is $1.89.
And how does that compare?
That's actually a little bit above the analyst consensus, which was around $1.87, so
Yeah.
a slight beat expected there.
Interesting.
Margins.
For Q2, they see consolidated gross margin between 70.5% and 71.5%, and operating margin between 28% and 29%. Still strong profitability expected.
Okay, so continued strength projected for Q2. What about the full year? Did they change their outlook from before?
This is pretty significant.
Yep.
They reiterated their full fiscal year 2026 guidance.
Reiterated. No changes up or down.
Exactly, which in this environment is often seen as a signal of stability and confidence in their plan.
So what are those full year numbers again?
They expect total revenue between $6.625 billion and $6.875 billion. Midpoint is $6.75 billion. That reflects 3% year-over-year growth, or about 4% if you exclude Spot's impact from
Yeah.
prior year comparison.
And that aligns with consensus too.
Generally, yes, it's
Okay.
in line. Shows a predictable path. Full-year diluted EPS expected between $7.60 and $7.90. Midpoint $7.75. Also in line.
Okay.
And they're holding firm on the full-year margin guidance, too. Consolidated gross margin, 71-72%. Operating margin, 28.8-29.8%.
So sticking to the plan, that reiteration really underscores their belief in the strategy, doesn't it? It absolutely does. Despite any market jitters, They seem confident in their innovation pipeline and the market opportunities ahead.
It definitely sounds like they're confident about executing for the rest of the year, navigating this dynamic tech landscape.
Yeah, absolutely. They seem very focused on just executing that roadmap, capitalizing on the AI and cloud growth, improving profitability, generating cash, and ultimately delivering value for customers and shareholders. It's clear their strategy revolves around building that intelligent data infrastructure, really hammering on cyber resilience and going hard after enterprise AI. Those aren't just trends to them, they seem like foundational pillars for growth.
Okay, so let's wrap this up. What's the big takeaway for you from this deep dive into NetApp's latest numbers? It really seems clear that, data is everything now. AI is changing how we use it so fast. And companies like NetApp, they're not just trying to keep up. They seem to be actively carving out leadership spots. Q1 shows that strong foundation intelligent data infrastructure, all flash, native cloud, while really pushing hard into AI opportunities. They're positioning themselves beyond just storage, right, as a key enabler for AI.
Exactly. That's the key point. This AI shift, it's not just about faster chips. It's fundamentally about how you manage and unify these huge complex data sets across different places on-prem, multiple clouds.
The hybrid multi-cloud challenge.
Right. And NetApp's results, their strategy, it really suggests they're aiming to be that silo buster, the AI workload innovator that can give you unified control everywhere. Their performance kind of highlights that unique blend they offer. Enterprise reliability meets cloud agility. And it leaves you with a really important question, I think. As AI keeps evolving so rapidly, how will NetApp's commitment to this hybrid multi-cloud data management with its flexibility, its performance, guarantees how will that further set them apart? How will it help businesses truly leverage their data to win in a world where data really is the new currency?
Definitely something to chew on as this whole landscape just keeps accelerating. Thanks for joining us on this deep dive. Until next time, keep learning, keep questioning, and stay well informed.